His company has disbursed close to 4,000 crores worth of loans and has financed the dreams of close to 4 lakh students. What did your parents think when I think 1 year after college is when you said that I want to do my startup? What was their reaction?
It was a mixed reaction. My mom, of course, freaked out. Education financing is a very under-penetrated segment. SBI disbursed 1.4 lakh loans in FY25. We are second with 1.1 lakh loans.
Oh, wow.
Canara Bank, Bank of Baroda, Credila are the next three with 50,000 number of loans. If you go down on the street and start giving money, people would love to take it. Tamil Nadu as a state having one of the highest education loan disbursals and highest NPAs.
If there are 2-3 things that you learnt about financial services that you would want to advise budding entrepreneurs, what would that be?
The moment you start thinking that you're going to be in the Bahamas and sipping a cocktail in 2 years or 3 years, you are actually prepping yourself for failure.
What advice would you give? How do you prepare for a fundraise if you're an early stage founder?
A lot depends on.
Hello and welcome to Prime Venture Partners podcast. I'm your host Shivani, and today we have with us someone very special. He started his first startup back in 2014 when it was not glamorous to be an entrepreneur at all. After a couple of attempts, in 2016 is when he found his true calling with education financing, and we have the founder of Propelld with us. Today, his company has disbursed close to 4,000 crores worth of loans and has financed the dreams of close to 4 lakh students. So welcome, Victor. Welcome to the Prime Ventures podcast.
Thank you so much, Shivani, for having me here.
Good.
Thanks for the kind introduction.
Great. So the agenda is quite simple. Most of our listeners are entrepreneurs, budding entrepreneurs.
Nice.
They would love to know your journey and a bit about Propelled, and we'll get into some nuances of education financing as well. So maybe let's start with your journey itself. Tell us a bit about, your childhood. Where did you grow up?
My childhood was in Bhubaneswar. It's a tier 2 city. It's a beautiful city. Most of the families there are not really business oriented. There are not a lot of business families, a lot more government families, very academic sort of environment though. A lot of focus on academic excellence and really going to the top level. And that's where I actually met my co-founders, Bibu and Brijesh as well. We were in the same school.
Oh, wow.
Funnily, our fathers for the three of us are from the same college as well. So, they're different batches. So you can imagine what the thought process would be like in the family. It was exactly the same. Government families pushing us for academic excellence, really wanting to see us in IITs and then IIMs and, probably in the US doing something. And that's how our, childhood was.
Got it. Nice. And what did your parents think when I think 1 year after college is when you said that I want to do my startup? What was their reaction?
It was a mixed reaction. My mom, of course, freaked out.
Okay.
But my dad has consistently sort of told me that everything is possible. He has actually inculcated a lot of never be afraid, go for the best, and doesn't matter if you fail, and you can do whatever you want, sort of an attitude in me since my childhood. So he had no option but to support me.
Because that's what he taught you.
Yeah.
Fair enough. So after 2014, I think your first startup was in food, if I'm not mistaken.
It was actually in education.
Oh, it was in education. Okay.
Yeah.
So what did you do then?
So we had, back then we had no idea of a lot of things. Even if I had finished my MBA, I realized I was very woefully, I had no capacity to really understand what happens on the ground. So education honestly had been a very common thread and common calling all throughout, though. So I'll just, before answering that question,
Yeah.
I'll just actually put some context on why education actually.
Yeah, sure.
So our families, in a certain way, my family, Bibu's family, are educationists. Bibhu's grandfather had, after his retirement with his pension money, had built a small college when
Okay.
he used to stay in a two-room sort of house. And when he passed away, there were at least thousands of people across the country who had come over to pay their respects for the great man that he was. My dad has been the go-to person for education in the extended family overall. So, any cousin, any sister's son getting into an ISM Dhanbad, my dad would drive him on his scooter and take him there for his interview. That's how much invested he was. Very funny story. I was in Chennai when I was doing my undergrad. I was I'd just come out of a shoulder operation. I couldn't find my dad. My dad was out finding all MBA colleges in Chennai. Um,
Nice.
so coming back to the startup, right? So
Yeah.
we started an education startup. It was about teaching kids about astronomy. So we built a portable planetarium. A couple of my other co-founders were different people from my same college. We would take the planetarium and get kids in there, teach them about astronomy. It was a lot of fun.
Yeah. And this was with the same co-founders you have now, or
No, it was
it was
yeah,
okay.
it
So
was a
how
different
did
set of founders.
so between 2014 and 16 you tried a bunch of things, but
Yes.
what kept you going till you found Propelled?
Um, I really wanted to. Um, I really wanted to do that. I really wanted to solve a problem. I knew I was good enough to get there. I knew I was learning along the way as well, although it
Yeah.
was not very quantifiable learning.
Yeah.
But I had that confidence that yes, I am indeed learning. If not, what are the things to do? At least the things which are not, which you shouldn't do.
Yeah. And sometimes those are the most valuable lessons, right? Because we keep telling our founders, I think you do your experiments, but if you learn one thing out of it of what not to do, even that is like extremely valuable. Because startup journey is that it is never one straight line. You
Yes.
always take different paths and you arrive at where you
I
do.
agree, as in all the Paul Graham essays make
Yeah.
sense now. So, fail fast.
Yes.
You are bound to fail. How
Correct.
do you fail fast and fail cheap? Fortunately for us, we didn't have enough money after just 1 year of work. So we did fail cheap. And,
Yeah.
we failed fast. We could have failed faster enough, though, in hindsight. But those are the two things that worked for us.
Got it. And then when it came to Propel, right, like education, I get it. But getting into education financing,
Yeah.
what was the motivation there? And maybe a little bit of how you came together with your co-founders as well.
Sure. So, that's a slightly longer story though.
We are all yours.
After my first startup, on my second stint is when I met Brijesh, who is my second co-founder, and Propel's idea came from Bibhu. At a first level, that's when we got together. So, in fact, on our third startup stint, me and Brijesh were doing it. There was a custom apparel company called Pristine Cut, and we were staying at Bibhu's place. That's where that idea of Propelled actually came in. Because we were staying there, we were lodging there free of cost. Me and Brijesh, Bibu was
Yeah,
taking care of us. That entire environment became a very startup environment. We were always discussing ideas.
got it.
Bibu is a very similar guy to me, as in our families are similar. We've been in Maths Olympiad together, we've been in IIT Madras together, but he's a way more fundamental guy. So he likes reading white papers of very old economists. He's that guy.
Okay. Okay.
Uh, One of his, this endeavor, he ended up reading a Milton Friedman's paper on education financing, which argued about how education financing should be an endeavor by the government. It should be a public expenditure. and the nature of and the form of the expense, instead of debt, it should ideally be an equity sort of structure.
Yeah.
The arguments for both. One is, of course, once somebody gets educated, they're more civilized, and there are a lot of indirect effects in the society. So, of course, public expenditure, and then
Yeah.
equity form of financing, because you can get 100x returns. It's an
Course.
asset,
Yeah.
or you can get a lower sort of returns or a negative sort of returns as well. So he had argued about that. A lot of people had sort of tried it to certain different degrees of success, but that was the genesis of the idea on education. We started our research. We met a lot of banks during that time, and what we realized is, education financing is a very under-penetrated segment.
Yeah.
Actually, it took us by surprise. Um, you know, in our heads, education is one of the largest spends. We had seen our families do it. The macro numbers also suggested that it's one of the largest expenses of a household. We started going into numbers, and we realized that the penetration of education is hardly at a 5%, of financing in education is hardly at a 5%, 7% level. It was also hard for us to believe that, because in coming from an IIT or IIM, the people who looked for an education loan got it.
Yes.
So we started meeting a lot of institutes as well, and that's where we realized that it sharply drops off. Financing penetration sharply drops off as you start going the next level and the next level and so on.
Got it. No, but here again, that's very counterintuitive, right? Because if you see the large other expenses, what do we spend on? We spend on housing, we probably
Yes.
spend on vehicle, we
Yes.
spend on education.
Yes.
Healthcare, I won't go to. But
Yes.
education, healthcare are fundamental, and
Yes.
yet nobody finances it. Like these
Yes.
are so many big banks, there are HFCs, everything for housing,
Yes.
but nothing for education.
Yes.
Now, when you dug deeper, what did you find about why can't these traditional players, sort of serve this segment? Like, what happens there? Like, what's the gap?
Yeah, absolutely. That's the great question, Shivani, as in,
Yeah.
and that's how we also sort of thought about it. Um, Before going there, though, I'll
Yeah.
probably put in talk about a little statistics.
Sure.
So in
Yeah.
FY25, SBI, as the largest education loan lender in the country, has given out 0.15 trillion rupees of education loans.
Okay.
You know how much is can you guess how much is the education loans for home loans in FY25 by SBI?
Must trillion rupees, right? Must be at least 10 trillion or more than that.
Close to around 2.28 sort of trillion. So 0.15
Okay.
versus 2.28 trillion. So
Got
that's
it.
a 15x sort of difference.
Nice.
And you're absolutely right. That's how it is. Now, so, there's not a standard, one answer on why lenders have not really looked at it. What I have understood after being in the financial services industry is that typically banks, let's say, take the example of the history of home loans. Typically banks seed that segment.
Yeah.
That's when they show the viability of a particular segment. That's when fast moving products or fast moving lenders with come in with either a differentiated product or a differentiated underwriting, or
Yeah.
better unit economics, or certain geographical area, or slightly different segment, like what happened with affordable housing for that matter.
Yeah.
What happens with SMEs? Banks typically end up giving a lot of loans in corporates, large corporates, and you get a certain segment, get into SMEs.
Correct.
In education, however, the initial seed by public sector banks has not yielded really great results. So the NPAs, you would have read headline numbers of NPAs in education loans of close to around a 10% sort of level.
Got it.
If you dig deep into those numbers, like we did a study along with Sibyl as well, anything which is above a 5 lakh sort of loan has probably a 5% sort of NPA. But something which is less than 4 lakh, less than 4 or less than 5 lakh, has NPAs of more than a 40% sort of level.
Oh, wow. That. How do you even build a product there?
No, so
Yeah.
I'll go one level earlier.
Sure.
I would say ki to me, it looks like not retail underwriting, retail risk now. It looks like systemic risk.
Got it.
So that's what actually it is. As in, when we look at different levels of data, we see Tamil Nadu as a state having one of the highest education loan disbursals and highest NPAs. We correlate it with the political, the cycle that goes
Cycles.
on in
Yeah.
Tamil Nadu, and we sort of understand that. And then you look at products as well, as in less than 4 lakh. Typically, you also have a no questions asked sort of thing as well. And so these, if you correlate from all of these data points, what you end up at is, education loans have been seen in a way where the underwriting has been looked at in a very generic way, in a retail level underwriting,
Got it.
except for your IITs and NITs and IMs, like your top colleges, where it's easy to say that this student will get a job.
Yeah.
Taking that sort of a maths out and doing it at a tier 2, tier 3 level is hard. So
Got it.
I don't believe that's the way education loan has been looked at. It's been looked at from a retail underwriting lens, whereas it is not. That's been
Got
our
it.
learning.
Got it. And
And
even most of these banks, right, if I'm not mistaken, even education loan, they give it out as a secured loan, like you secure it against a property. I'm not sure, but that's my understanding,
so
right? But is that the way they look at it?
it's beyond a 7.5 lakh.
Okay, it's beyond the 7.5 lakh.
Below 5 lakh, it's a lot of political influence and a lot of pressures come in. It's a priority sector. It's a
Understood.
touchy subject.
Fair.
So a lot of interference comes in here as well.
Understood. 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 So when you looked at this segment and said that there is a gap, you took an approach which not many other startups have done, right? Many of them have gone study abroad segment, but you started with the tier 2, tier 3 colleges and the tier 2, tier 3 segments.
Yeah.
So give us a bit of how you underwrite for this segment, like what you were touching upon just now, right?
Sure.
Like maybe we can double click there and understand how you guys do it.
So this is a project financing approach here
Okay.
in education. Somebody is doing a project. Is that project good enough? Uh, can that person do that project and get an outcome out of it? Outcome necessarily does not have to be, say, something as quantitative as just income.
Yeah.
Outcome could be something as simple as, yes, I finished my courses on time and at a certain level of quality as well.
Yeah.
Did whatever assignments were asked of me. I got a certain level of quality as an input, and I'm happy about that too. So, a lot of our underwriting actually looks at these things. What is the institute like? What is the course like?
Got it.
We do a rating of institutes and course. We do an initial rating, we do a periodic rating exercise, like what a CRISIL would do. You should think of us
Got
as a
it.
CRISIL in education.
Got it. And this
That's
is by course, by universities, is it?
Yes.
Okay, wow.
As we speak, we are also now with AI coming in, we feel like we have a lot of superpower now, where instead of our risk team being constrained with the number of institutes they can put and courses they can potentially dig into, a lot of our work is done with aggregating data across a lot of sources. So, yeah.
Got it. And even when you then aggregate this data, right, like will it be at a geography level by engineering versus medical? Because it also should look at output, because at the end of the day, if these guys go get placements, get a job, is when they'll repay your loan, right? So is it statistically correlating to, what the requirement demand is in the market as well? Or is it just based on input metrics that, okay, good university, good course, and good student in
So
a
it's
way?
a combination.
Okay.
It's a combination of inputs and outputs. At certain places, like you mentioned, engineering, higher education degrees, I should say, like UGs and PGs, job is at the end of it. Not necessarily everywhere, though. You
Got
look
it.
at an UG MBBS, most of the doctors typically go for a PG after that.
Yeah.
They love studying more and more.
Yeah.
So you don't see a job at the end of it
Got
after a
it.
UG MBBS. You probably see a PG degree at the end of it. engineering, MBAs, PG programs, you see a job at the end of it. If you look at other segments in education, which is, say, somebody who is sending his kid to Akash or Alan for preparation, can't really put getting into a IIT institute as a
Output
outcome.
there. Yeah,
That's
fair.
a way harder sort of outcome to
Yes.
really track. But definitely the quality that was promised versus the quality that was delivered. Was the course done on time? Did the course start on time? Is the course happening on time? Are the students happy with the course going on at intermittent times as well? Where they over promise something? These sort of things come in. How
Got
we
it.
approach it is we do an initial rating. And then when students start repaying the loan, apart from those signals that typically a lender looks at from a financial point of view, we see these signals, repayment signals, bounce signals, customer feedback signals to our
Got it.
customer care team, also in terms of their course and institute behavior and
So that's a
how
rating
that's
for the
going on.
university also. That
Yes.
affects the
Yes.
university rating as well.
Yes. Which keeps
Got it.
changing over time.
Got it. And how do you partner with these universities? Like you would also be working with a few very closely, right? So what role do they play when it comes to, working with you and giving you access to the students?
Different kinds of roles. We have a team which goes and talks to these institutes, and partners with them, figure out the norms of the partnerships as well. Over
Got
time,
it.
we have learned and divided them into different kinds of partnerships. We have, of course, a risk team which does an initial scoring and then continues to revamp the score as well. With respect to institutes, there are commercial partnerships. So, one piece is them being a pure sort of distributor of students, just helping us get access to students and
Yeah.
so on. One part is a commercial agreement as well, where they can potentially, if they want, come in and subsidize education loans for their students, where, in a scale, from a scale point of view, it can be a purely interest being borne by the student or the parent versus to a point where it's entirely borne by the institute and it becomes a zero cost sort of product for the
For the
students or the
student.
parents.
Got it.
Then there are arrangements from a risk point of view. So earlier we used to have arrangements of FLDGs and protections,
Yeah.
but we have realized over time to have a lot more control at a operational level. I shouldn't say control is the right word, but a lot more transparency and lot more feedback at an operation level instead of keeping it at a broader risk level of an FLDG. So, which means a regular feedback cycle between institutes and us that
it.
these are your students who are saying that they're not happy with the course. This is what they were promised, this is what they are delivered. Your sales guy potentially over promise them. Can you look into that? And can you solve these things as well? So there's a in the constant cycle and typically in our collections process as well, this is a core piece. We fundamentally believe that if you solve the problem of the student here, solve the problem of the parent here, lot of the collections really happens there. It's an asset generating use case.
Yes.
People fundamentally have very high intent when they're pursuing these courses, unless of course at the top of the funnel they have been sold by a fraud institute.
Yeah.
And we've had those things happen as well, so we've built our engines for that. Yeah.
Got it. And so when you're building this for the students, right, the collections piece of it is really tied to the outcome to a certain way, plus also their ability, intent to pay.
Yes.
What sort of technology enables some of these learning loops within the system? And how has AI sort of propelled, especially on the collection side, right? Because we end up seeing a lot of startups on the collection side, voice calling, bunch of other things. But at the end of the day, it's intent to pay and ability to pay. These are the only things that you need to solve. So what are the
Yes.
things that you guys have built, or what is it that the focus is on even going forward?
So both with respect to underwriting and collections, it's highly tech-led. It has to be tech-led as well because we are dealing here with a massive number of students. Just to give you that context again, if SBI disbursed 1.4 lakh loans in FY25, we are second with 1.1 lakh loans.
Oh, wow.
Canara Bank, Bank of Baroda, Credila are the next three with 50,000 number of loans. So we always deal with a very high number of loans.
Correct.
So on the underwriting pieces, as I mentioned, getting deeper into ability means two factors. One is an affordable housing thought process, which is how do you go deeper into the parent's income or a household sort of income, which is beyond what you see on traditional
Got it.
document parameters. Second part of the ability is with respect to the future potential. So if there is an income at the end of it, which is let's say a BTech or an MBA, UG or some UG and some PG programs, then you go deeper into what sort of placements have you historically seen.
Yeah.
Can you corroborate that sort of a placement from few LinkedIn sort of data as well? It's not super sort of silver bullet and fully foolproof, but those are the directions.
Got it.
Then fundamentally, with respect to intent, how do you go beyond just bureau and look at the promise versus delivery and look at those sort of signals coming in into the system with respect to, say, usually people track cohort level bounces.
Correct.
We track cohort level customer success, customer feedback, and break it down into, say, not happy with the course because of X reason, because of Y reason. We go deep there. The
Got it.
usual thought process, but going deep there. In collections, again, once guys go to ground or there's a call that happens, we go a lot more deeper, more deeper with respect to the feedback coming in, so that the feedback is not just a financial feedback, but
Correct.
also a feedback on institute and course and what we had sort of assumed versus what is really happening.
Understood. Understood. And currently, at least, just maybe switching a bit out of education, right? But just in terms of financing, like we do a lot of fintech investments ourselves, but it has been a credit cycle going on.
Yeah.
A lot of people affected, a few shutdowns as well.
Yeah.
But you seem to be doing well, raised a round recently. So how have you, how do you see a credit cycle play out in something like this, and how do you prepare for it? How do you prepare the risk teams? How do you prepare the on-ground teams?
That's the nature of the industry,
Yeah,
as you're
anyway,
aware, right? As in
yes.
credit cycles will come in, people will, everybody will learn from there and, then make better systems. As a company, fortunately, we've had a mindset while we built it to have a very risk-first mindset. Whenever we discuss our investor meetings, quarterly board meets, or any sort of thing that comes in, any discussions outside as well, we always say that risk is first. We can potentially sacrifice on our growth, but risk we will never sacrifice, given the second order effects that it usually sort of brings in on the capital side, on your ratings and so on. And it's so hard to come back
Yeah.
once your risk goes really awry. Somehow we've just understood that a lot deeply, I should say. And somehow we've also been fortunate of being in the education ecosystem where it's a lot more robust sort of performance. We've seen that performance play out, and I'll tell you why. So, during COVID, during demonetization, during let's say the edtech sort of crisis as well,
Yeah.
our NPAs have consistently stayed around that 1.2% sort of level.
Got it.
I'll tell you, we've taken actually, very different calls. Let's say during COVID, a lot of people were pulling back. We were also advised by our board, by our investors then, to pull back and not to lend. We
So disbursals, yeah, most people stop disbursals.
stopped
So,
disbursals
yeah,
and
correct.
reduced disbursals. We
Yes.
actually increased disbursals.
Okay.
Why we did that is because we could see that on the ground with our institutes, the quality of students coming in is actually getting better. The quality of delivery, the quality of the intent of students to actually study, the attendance percentages, for example, were actually going up. So for us, it was, and that bottoms up data also correlates with a top-down thing which we had once read during MBA sometime, that during periods of macro depressions, there's a lot more investment in education. People want to do that, so we could correlate those things, and that was a call that we took. So it played out really well. It's not just in terms of NPAs; it's also in terms of, say, the Morat sort of products that we were typically giving out, we
Yeah.
actually had very little parents actually opt for it. People
Oh,
were,
wow.
because people were happy with the course, happy with the institute. Very few people actually took that and took it for a smaller period as well, two
Got it.
months or 3 months and so on. So
Wow. No, I think we have seen people giving like months, 6, 7 months or whatever. Like the
yes,
Morats went
yes.
and nobody was disbursing at that point, at that time,
Our
right? Like
portfolio
nobody
had
did it.
probably not more than 10% of the people took a Morat.
Oh,
We
wow.
offered it to everyone.
That's actually, this is the first time I'm hearing this,
Yeah.
at least during the COVID period. No, great. And actually, it does make sense, right? Because during a period of uncertainty, people will invest and, I mean, essentially want to complete their educations, focus more because they don't know what's going to happen anywhere
Exactly
else,
right. Yeah.
right? So,
Yeah.
yeah, makes a lot of sense. But it's, for me, it's very surprising for people who don't come from financial services, right? Like
Yeah.
none of the three of you come from financial services. And yet you're saying that, okay, we are risk first. We are, we think that, okay, growth can be compromised, but this is something that we don't compromise on. So how did you guys like learn all of these, or what were the key things that, made you realize that this is very important in financial services?
I would say we had some understanding because
Yeah.
we're all MBAs in finance, and I had given my FRM. Bibu is a CFA level 3, so we have some understanding of
Yeah.
that. I would credit two people here though, as in one, my co-founder Bibu. I think because he's such a fundamental guy. There are a lot of places that he really gets, and deeply understands. And he had, before joining Propelled, he had a career in project financing. He was there and doing it for a good 2 years. If not Propelled, I'm sure he would have been one of the best investment bankers in the country as well. And definitely to our investors too. So typically, as our investors came along, who had seen a few lending portfolios, and of course with Westbridge coming in,
Yeah.
who have seen everything that's there in lending,
Right.
it's just
Yes.
gotten more and more on that.
Got it. Got it. And how do you, like, since you started in 2016, right, till now, if there are two, three things that you learned about financial services that, you would want to advise budding entrepreneurs, what would that be?
I think the same things again. First piece is financial services, or
Yes.
you mean lending,
Just lending. Yeah,
right?
because you are the expert there now. So, yeah, lending.
So lending, I would say, first piece, get an extremely deep appreciation of risk.
And
Uh,
how do you do that? Like, how do you, like, suppose somebody doesn't know anything about
yes,
lending today, but does feel like there is some niche, maybe healthcare, that they want to focus on.
yes.
How do you even start appreciating the?
Couple of ways, start, keep that, start yourself, see that as a, let's say, an axiom, and go from there and get deeper and spend more time with, let's say, the collections team, spend more time with the, people on the ground who are looking to collect money.
Yeah.
As a founder, spend more time there first before figuring out distribution. It's very easy
To get
to get
distribution.
sidetracked
Yeah.
and go into a consumer mindset
Correct.
of cracking distribution. Great,
Yeah.
you can do it, but keep that for later. Get that appreciation here first.
Got it.
That's one thing I would say. Second piece is understand the overall business model of lending, how it works, the power of compounding, and the numbers, the maths behind it
Yeah.
really deeply. And spend a lot of time, do those models yourself. They would be wrong, but it'll just give you an appreciation that lending is a more compounding game.
Yeah.
The way leverage works as a multiplier of both your profits and your losses.
Correct.
Why it's important for you to make profits now, and even at a very small scale, and and the second order effects of speaking to, maybe spend time on the capital side too.
Which is
Spend time
partnerships with the debt
partnerships
side.
with on the debt side,
Yeah.
and get a deep appreciation of what people look for with rating agencies. So I would say these pieces more
Got it. And actually, you make a very interesting point, right? Because the young startups that come to us, everybody thinks distribution.
Yes.
Like distribution is the first thing, and but like our advice to them typically is, yeah, look, if you guys are lending money, everybody will want money.
Yes.
So distribution is fundamentally not the thing that you need to solve in lending. It is risk, it is collections, it is debt partnerships. When you went through your rating journey, right,
Yeah.
how did you prepare for it? Because this is, trust me, like early stage founders, it takes some time for them to understand the discipline, the things that happen when you undergo a rating.
Yeah.
So what was your journey like?
So rating is a process that we are doing now.
Okay,
We are yet to be rated though.
okay,
It's something we are expecting over the next 1 month.
got it. How
But
did you prepare for it? Yeah.
but we've our preparation, you know, had actually started not from rating, as in it had been a continuous from day one that we started. We had spent more time on risk and credit and collections as compared to on distribution. We had been advised the same. We probably didn't understand that advice as deeply, but over time, I think very quickly as the differentiator started to happen during that COVID period, I think that gave us a lot more deeper appreciation of how our earlier discipline is letting us now move way more faster than what our competitors were then.
Got it.
And successive sort of rounds, we've seen, although we had raised lesser money than what our competitors had raised, we've seen, and we were at a lower scale. We've seen that over time, that with that strong fundamental base, we are able to overshoot and be at a very different level right now.
Got it.
So it's the appreciation of that actually started way back, not
it.
while rating, even before that, let's say while going to lenders, even before that, while equity raising and COVID and so on. So,
Got it. No, I think one of the founders that I have invested in keeps telling me that, look, this journey of the IPO starts the day you start the company. It doesn't start like 1 year before the IPO, right? So same thing. I think you're also saying the same thing, that discipline comes in very early. Things happen later, but the discipline is very fundamental in
so
this
I would
business,
want
at
to I
least.
would want to add something here, right? Which
Yeah.
just came into my head here. You're absolutely right. If you go down on the street and start giving money, people would love to take it.
Yeah.
So the fundamental here being of risk, compliance, governance, and
Yeah.
regulations and so on, people have to understand here that a consumer versus this is very
Very
different.
different.
For founders, they have to accept this journey. They cannot look at themselves and compete with their roommate who is now building a consumer company. If they start thinking that way, you will
Yeah.
start taking all the wrong decisions. Understand that the business model of a consumer is all about distribution and
Correct.
then monetizing a little bit. Whereas here,
Yeah.
it's about monetizing from day one and compounding, sort of bringing in a lot
Yeah.
more value. The way we see distribution as well is that distribution is also a part of risk. It's not a matter of me giving out 100 loans. It's a matter of how do I build my distribution so that I get 100 good quality people as well,
Correct.
from my risk scale point of view, not necessarily seen good from a traditional point of view,
Yeah.
my sweet spot, but who would repay back.
Fair. Yes, it's all about, at the end of the day, you need to get the money back with
Yes.
the interest. Yes. So, how are you thinking about the vision and the next 5 years for Propelled? What's the milestone?
Lots to do. We want to IPO in the next 4 years. Um, we want to set new benchmarks for lending. I think that's something that we have set for ourselves. The guys that we look up to, say somebody like a Bajaj, we want to be better than them, over the next 4 years. Uh, how that will come about is, a lot of investment in tech. Fortunately, we understand lending, and we also are, because we are engineers, we understand tech too. So we have a great tech team. We work on a lot of tech based solutions for our distribution, fulfillment, and that's why we've been able to be profitable at this scale while operating on loans which are close to around, on an average, probably 1.5 lakh or 2 lakh average, versus let's say a home loan or a affordable loan which will be 10x more. So a lot of investment in tech, a lot of, now with AI coming in as well, bringing that into the underwriting piece too, with respect to both underwriting parents, underwriting households,
Got it.
the institute and course-based placement scores that we are building.
Yeah.
Right now, it's at an MVP sort of a stage. We already use that thesis,
Yeah.
but how do you make it more real-time and for the entire universe instead of 100 sort of this thing? A lot of focus on risk, a lot of focus on profitability as well, and bringing in a lot of cost control. So, just to give an example, in the last 3 years, our costs have almost stayed the same. It's been around that ballpark, 67 to 72, 73 crores in the last 3 years. So, how do we further sort of reduce that down and make sure that AI sort of brings in a lot of transactional pieces, day-to-day pieces get automated? The gold standard that typically Bajaj sort of pedigree NBFCs bring in is a 3% OPEX of an AUM and a 5% ROA of finally, right? So
Correct.
we are asking ourselves, is a 1%, 1.5% OPEX possible with the current
With
sort of
AI
thought
coming in.
process and tech? We are a branchless model. We can be those guys. ROA is right now on a normalized ROA level. When you assume that if you would have built our business just on NBFC front, we would end this year at close to around a 2% ROA level. So should we think 5? Should we think 6.5, 7% sort of level?
Yeah.
Or can we sort of, bring in some of that value to the end consumer as well? So these are questions that are there.
Right.
On the end consumer piece, one piece which I missed, and I really want to, talk about that is on the end consumer sort of side, go beyond lending, and how do I help students and parents think about lending as one input towards overall budgeting, and then towards figuring out about which institutes and courses should they really pursue as well. We've been getting those sort of problem statements now that, if I get a 30 lakh loan,
Yeah.
I want to do a PG MBBS. I probably do not have any more liquid assets or illiquid assets. Should I even be thinking about a 1 crore PG program?
Yeah. Correct.
So,
How can you make them think through all of
think
those so
through
that
those things.
opportunities open
Yes.
up, right, for them as well?
Yeah.
Got it. No, I think that's fair enough because I actually was talking to some other investor friend and I said usually NBFCs, the traditional ones, operate at like 50% cost to income, 60% cost to income. But with AI coming in, somebody building, tech first can easily reduce that. So your ROAs, your ROEs
Yes.
go up and
Yes.
it's possible now. Like I think Bajaj Finance is a very well run organization, but it's still run with people and it obviously some tech, but with people heavy, right? But now you can do a lot of that in an AI first way.
It's actually going to happen across the industry. It's already
Yes.
started happening though. I know of many NBFCs and traditional NBFCs which have started adopting and embracing AI calling agents, reducing their costs in collections, bounce, and so on. So it's already happening.
Yeah.
Of course, larger NBFCs, larger companies would be able to optimize on that.
Correct.
For us, we are thinking of more foundational level of more AI first sort of fulfillment,
Makes
AI
sense.
first journeys,
Yeah.
and so on. So,
Yeah,
but
it's
already
fundamentally
happening.
different way of then
Yeah,
lending.
yeah.
Got it. So now just maybe switching gears, I'll come to my last section, right? Like a few advice for the budding entrepreneurs who might be watching. So I think one question I anyways covered, but one thing that people struggle with is getting that initial team. You are somebody just out of undergrad or postgrad starting a company. How do you hire the initial team? What do you optimize for?
Are you asking for co-founders or the team?
Co-founders and the team, like even the founding members of the team.
Sure. I would say co-founders are a must.
Yeah.
You need. There are many people from our, my company as well who look to start up, and I would also advise them the same thing. First piece, think of this as a marathon, think of this as a 10-year sort of journey. The moment you start thinking that you're going to be in the Bahamas and sipping a cocktail in 2 years or 3 years,
Yeah.
you are actually prepping yourself for failure.
Yeah.
The mindset really changes.
Yes.
Then, if it's a 10-year journey, it's only logical for you to have a great co-founder. So it's, you don't have to optimize for skill sets, just have to optimize for an attitude and hunger and drive and being willing to be part of the journey, that openness and that mindset. Skill set you can look at as a last sort of option. Then with respect to initial team, uh, I would say, look for people who are problem solvers. Doesn't matter what their uh, pedigree has been.
Yeah.
Doesn't matter where they have been educated, where they've worked, how much of an experience they've had. But if they are problem solvers, if they really have that drive, they are people of high agency. They can get things done. Look for those people, optimize for those people. It could
Yeah.
be, a lot of where Propelled is at right now is also thanks to a lot of people who've come in and problem solved. They've been across different this thing. My
Yeah.
friends, my batchmates from IIT, my hostel mates from IIT,
Yeah.
to guys who are just fresh off a college and now, built Propelled, or, now, potentially
Yeah.
can be a CBO over the next 3-4 years or so. So get those guys. Get don't look for
Yeah.
people who've done things. Actually, you have higher chances of going wrong there.
Because
uh,
they'll come with a bias, or
Come with a
they'll,
bias.
yeah.
And what I've seen there is anything that comes out of the syllabus, they
Yeah.
usually sort of struggle there. So it's
Got it.
best to get them after a particular level, when certain facets of the business are very clear to you, that what exactly do you really want, who
Got it.
exactly do you really want.
Got it. Now, I think the initial members matter, right? And people often optimize for pedigree, or they optimize for, okay, this guy comes from risk, so I'll get him. But if you're fundamentally changing the way or the customers who you're underwriting, that guy is
Yes.
not going to be of any help. So yeah, I
Yes.
think that makes a lot of sense. And here, one thing that's very different for this industry is that the regulator is very active, and obviously it's a very well regulated industry. So
Yes.
how does one as a startup begin to understand some of these nuances, and how do you build in a way that you're regulatory compliant? Like, imagine you are somebody just starting up, right? Like, how
Sure.
do you start understanding regulations? Who do you talk to? Who do you seek advice from?
ChatGPT. Spend
Yeah.
time, uh, go through the regulations in order.
Yeah.
I'm sure founders and logical guys would be able to get a hang of it. You can't fully outsource it. You outsource it only after you understand that fully well too. Of course, when it comes, you have to build that understanding yourself. That's something you have to invest in as a founder. The operational pieces of executing it
Yeah.
can then be outsourced, and you can get great advisors, great mentors, people who have done that, and bring them on board to look at things at a holistic sort of level.
Got it.
And then you can get a execution level person, so exactly what is happening there.
Got it. But you need to have an understanding. Like, you cannot say, "Ki, okay, I'll get somebody and he'll handle it for me." You
Extremely
need
deep
to know.
understanding.
Yes.
Extremely deep understanding. And you should be able to read between the lines. You should be able to understand the nuances and the theme
Yeah.
of
Intent
the
behind it.
theme and the intent,
Yeah.
the longitudinal direction of where the regulations are going towards, to be able to take decisions.
Got it. No, I think that is very important, right? Because often regulations also get updated, but the intent remains the same. So
Correct.
if you understand the underlying, you'll be able to at least direct the company in that, and you're not
Yes.
caught off guard. No, fair enough. And on fundraising, like, many people, like, you have now had, you have Westbridge, you have Stellaris, you have India, I
India
think
quotient.
India
Yeah.
Quotient, right?
Yeah.
So you have done this. What advice would you give? How do you prepare for a fundraise if you're an early stage founder?
It's a hard question. A lot
Yeah.
depends on how the macros are. You'd know better how the macros are, how things are seen from by typically the investors. What's in your hand is I feel you can prepare a lot, but fundamentally, I think if few of the things are answered, then the preparation is just one part of it. Running the process is as simple as a get to as a funnel.
Yeah.
I think the bigger questions to ask yourself before going into fundraising is
Yeah.
um, are you operating in a large enough opportunity? Number one, is there a very large market for it? I have seen, and we have struggled with that question as well
Yeah.
for a certain duration. How are you sort of convinced, and again, how do you sort of present that? Because presentation is also about which are the simpler things that people can sort of understand and buy into, and
Correct.
are you yourself bought into it is probably the primary question.
Yes.
Is there a real value of the product? Is there an honest value of the product that it's actually solving? That's the second piece of the question. And third is, do you have the team, or are you yourself with your co-founders and your early team emotionally invested and have the right sort of mental ideas on what the business is going to look like,
Yeah.
how you are going to look like, and are you invested in the right way for the right sort of duration of time? I think those are the three primary questions to ask yourself.
No, fair enough. I think that the TAM one, I think many people do struggle with it because how do you paint a picture, right? Like, okay, this market is X, but it's growing. Like, for instance, if you're building an AI solution today, how do you even compute the TAM for it? But if you don't fundamentally believe that this product will change the way things are done and this is how people will
Yes.
adopt it, and you
Yeah.
can't paint that story, I think it becomes tough. But yeah, I think I agree with you. And maybe just last question, how do you, like, it's been 7 years
Yes.
Propelled journey. I'm sure there have been ups and downs, and now that the COVID, I think,
Yeah.
accelerated the journey as well. But how did you keep yourself motivated throughout it all? And how do you keep yourself motivated as a startup founder? It's a tough job.
Uh, I agree.
Yeah.
It's tough. Um, I feel personally for me, the first part is the mission. Uh, call it mission, call it vision, however we say it.
Yeah.
But for me, as an I am that archetype of founder who is driven by, who can get up in the morning only when there is something really large to get to. Uh, the commercial pieces of it are an outcome to it, but I can't be driven if I'm not passionate about enough about that problem statement. So that's one piece, and the second piece is the people that I've worked with. My the having a lot of mentors, getting investor backing matters a lot. The people who work in your team, who come in day out,
Yeah.
and you see them work really hard because they're also seeing that dream with you. And definitely, most importantly, my co-founders. For me, I've been blessed that I have my friends whom I should call family. Like our families are very close. It's like we're friends since class six.
Yeah.
So you know, having them along just makes a lot of difference. As in,
Makes
you know,
sense.
so
And maybe just one last thing. What do your parents now think about now that you've been on the journey for so long?
I don't think my mom is yet convinced. My father tries to, put my case forward, market me in front of my mom that,
Nice.
and that he's doing well. But I think, somewhere they should be, they would be
Yeah.
proud that, I'm trying to do something here.
At the IPO bell, when you get her, I'm sure she'll believe you then.
Yeah, that's a dream. Yeah.
Yes, great. No, thank you so much. Thanks so much, Victor, for spending time with us, taking us through your journey. It was lovely chatting with you. Thank
Thank
you.
you so much, Shivani, for having me. It was good speaking. Yeah.
Dear listeners, thank you for listening to this episode of the podcast. Subscribe now on your favorite podcast app for free, and you'll be the first one to know when new episodes are available. Just search for Prime Venture Partners Podcast in Apple Podcast, Spotify, Castbox, or however you get your podcasts. Then hit subscribe. And if you have enjoyed the show, we would be really grateful if you leave us a review on Apple Podcast. To read the full transcript, find the link in the show notes.